Welcome to the Compound Growth Podcast with Colin and Wheeler, where we talk all things growth. From financial growth to career growth, personal development to societal progress, we explore how each layer builds on the next, compounding over time to shape who we become. Each week, we break down complex ideas and emerging trends into clear, actionable insights. Because growth isn't just about numbers, it's about understanding the world and our place in it. The information in this material is for general information only, and is not intended to provide specific advice or recommendations for any individual. Investment advice offered through Integrated Partners, doing business as Ko-Fi Advisors LLC, a registered investment advisor. Integrated Partners does not provide legal, tax, mortgage, advice, or services. Please consult your legal tax advisor regarding your specific situation. Past performance is no guarantee of future results. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful. Welcome back to our latest episode, looking back at a monthly recap. This is our What Just Happened series. We're going to be looking back at November. To be fair, it is November 25th today, so there's still stuff that can happen in November before people listen to this, but it's also Thanksgiving week. We're going to take some much-deserved time off. We hope everybody else listening is doing the same or did the same. I guess they'll get this after Thanksgiving.
Yeah. Well, actually, the first thing I want to talk about today, which is retail sales, which is kind of funny because we're filming this prior to Black Friday. But with that being said, there are a lot of estimates out there for what spending is going to be. This is the first year that from November to January, US holiday sales is projected to be over $1 trillion.
Well, it's
It's a lot.
the law of large numbers, right? Like it's so funny because Black Friday just isn't a thing anymore. It's just like the month of November is sales season,
I have a fun
right?
story for you. In
Okay,
fact,
share.
I think I told you this, but I used to work at Ralph Lauren. That was like my
Oh
first
yes,
job ever.
yeah.
Yes.
Yeah.
And Black Friday, we would be open for 24 hours, as all the outlets were at the time. During that time period, anytime during the year, you could walk in, and this was back, gosh, this was like 2005, maybe 2006. So it was 20 years ago. And at any basic day of the week, you could come in and get a polo shirt for $39.99. That was the list price of a polo shirt at the time.
Yeah.
Black Friday, though, we would have a sale where you'd get 25% off your polo shirt, but the polo shirt was $59.99. So we would mark the polo shirts up by 50% and then give you a 25% discount on the Black Friday sale. So long story short, Black Friday doesn't exactly have great deals, but for some reason there's this stigma around buying stuff in Black Friday, and now there's Cyber Monday and all this other good stuff. And I find to be better deals with Cyber Monday, just personally.
Honestly, it's all the same. Like it's every deal I've been buying. It's like buy now between now and like December 1st, right? Like
There
it's
was stuff
as
last
long as it's
week.
this month. Yeah, totally. I've been doing my Black Friday shopping for like a week and a half, and I don't know that I agree. First of all, this is why people hate big business because they do this shit that you were just describing. But I don't know that I agree that there aren't good deals to be had because there are. It's just that those deals are not unique anymore because they'll be there later. Like I was just buying something for a family member. It was like 30% off. That's great.
Mhm.
Also, at the end of the season, it will be 30% off again. Right.
Right.
So it's not the only time you have.
I should clarify. I do think that there's good deals, but there are definitely some shady things out there in regards to discounts. So I don't know. I mean, historically speaking, retail sales have grown anywhere from 3.7 to 4.2%. And this year they're anticipating it to be the exact same. So I don't know. We'll see where the numbers come in, but retail's been just a tough place in general to be this year. And, even with consumer spending going up, I think people are starting to be a little bit more cautious about their spending coming into the holidays versus what it was historically, just based off of the numbers.
Yeah, you know, that we've got a lot of the retail earnings so far, and also a lot of some of that's restaurants, right? And I've
Mhm.
been hearing some chatter from the Cavas or the Chipotles of the world, and they're basically like, "Hey, things aren't looking too good. The young consumer, especially, is not coming out to eat at our restaurant right now. Maybe fast casual is not in." And they're blaming like the young consumer. But like, have you been to Chipotle lately? Because it's not very good. It's
We
not
went
just that
we went 2 weeks ago, and literally Kaylee and I were eating our burrito in silence, and not the same burrito, different burritos,
they're different. We each
and
had a burrito.
yeah, we're like, "What is that with the pasta?"
The Lady
With
and
the
the Tramp.
dogs? Lady and the Tramp, yeah, we weren't Lady and Tramping a burrito.
Yeah, yeah.
But with that being said, we both stopped and looked at each other, and we were like, "This isn't very good."
Yeah. It's now look, I'll eat it, right? It's better than some alternatives, I think, but it's not as I remember it. And I feel like this happens. Like, honestly, when I was a kid, McDonald's was a very different restaurant than it is now. And I feel like these companies, as they continue to grow and they have to squeeze their margins, they can raise prices. But at some point, people don't want to pay $16 for a burrito bowl. My daughter just went to not Chipotle, but a local Chipotle type food chain in the Seacoast area with her friends. And I gave them like $60 and I said, go to lunch. And then they were going to go to a little market next door. And I got a text from her friend, like, it was $42 for our meal. And I'm like, yeah, that's how much things cost. Did you get guacamole? You got the
Yeah,
guacamole.
it's the guac, man. It's
It's
always
the
the
guac.
guac that marks it up.
But I think it's funny when 11-year-olds are like, wow, that's expensive.
I know,
you know?
man. Yeah, well, I guess it depends on which restaurant you go to too, but yeah, I
Yeah.
mean, it's everything's really expensive. I just went and got a tea this morning, and it was like 6.50
Yeah.
for
Yeah.
hot water.
Hot
What are you gonna
water.
do?
It's I was reading a book called The Service Berry, and it's this book that Jess has been encouraging me to read, and it's basically like an alternative to the economy. It's like it's a give and take barter type of system, or like symbiotic, nature, harmonious, natural existence, etc. And she pointed out that like one of the biggest scams that's ever been put on us is
Mhm.
the thought that we should be paying for water. Like water is free in the world. Yeah, we will pay like $3 for a Dasani bottle of water or like $8 at the movie theater.
Yeah, it's actually funny you mentioned that because I think I read something similar, an excerpt from that book one time, and I thought of it, and I was like, "That's what incentivized me to carry a water bottle around everywhere." So I was like, "That's a great point. Why am I
It's one of
paying
my
for this
favorite
stuff?"
things. Yeah.
Yeah,
Yeah.
yeah, it's true. On the retail front too, while sales are going up, normally there's also Black Friday deals on autos, and cars in general, but actually car sales have continued to cool, and it's been a rough year in general for auto sales. I think a lot of that has to do we talked about this last time where the EV incentive was going away. We weren't sure how that was gonna impact cars, but we had a pretty good idea that it was going to, I'll say, give tough times to a lot of EV automakers, but it's also affecting not just EV automakers, it's affecting pretty much every automaker out there because most automakers now have an EV or a hybrid component to them. So, with that being said, EVs are also down for the month of October in terms of sales from basically 4.8% from where it was last year. And I think most data suggests that that will probably continue to cool for the rest of the year.
I have a conspiracy theory,
I'm
and it's going to
excited.
start with a question.
Okay.
When do you think, and now look, I recall your Rivian story about peak EV, but let's
Mhm.
assume that peak EV has already happened, right? Like
Mm.
we've already hit the peak. I think that's not, that's a false narrative. But this is just as like for this game. Assume peak EV happened. When did it happen?
Do I go back to the first car? No.
No, no.
I
Okay,
think
come
peak
on. Like
EV,
modern, like Tesla,
like,
post
legitimately,
Tesla. Yeah,
I think peak EV was probably, like, 2015, 2016. I feel like that's when adoption rates for Tesla was, like, super high, stock was growing, people were excited about it, the network was getting built out, everyone flooding into the space. You know, to me, that's when it was the most exciting, which I know we're gonna talk about this in a little bit, but it kinda reminds me of where AI is right now. Where, like,
Mm.
everybody's running into the space and everyone's super excited about it, like, everyone's getting into the idea of having an EV and saving the world and kind of all that other good stuff. With that being said, I think EVs are still great, and in a lot of ways, they're better cars than, honestly, internal combustion in a lot of ways. But that's when I think peak EV was. But what's the conspiracy? Is this the correct answer or no?
I don't know if it's the right que um, I'm asking what in what year did, let's say, the largest adoption of EVs occur? Or,
Occur.
like, what in what year did we hit the largest adoption of EVs? Is that how you measure this?
Yeah, I think so.
Uh,
That would be what I
uh,
would take a stab in the dark because I mean, when was the Tesla Model S released? That was like back in 2008 or something, 2006?
so worldwide sales of electric cars exceeded 17 million units in 2024. So
Mm,
that was the highest point of sales, I think. So let's say that, like, we never see those sales again. We could say that we hit kind of like peak EV adoption at that time. And then everybody's like, wait a second, it's a pain in the butt to charge on the road. And maybe I'm not saving as
yeah.
much money. And then yada, yada, yada. I was thinking about this last night and how cheap gas prices are. Just like
Oh, it's ridiculous.
they feel like they've been suppressed for a long time. And they have been, right? So if you look back into the early 2000s or like mid 2000s, let's say 2005 to 2015, that 10-year period there, national gas prices were above $4 consistently,
Mm,
right? Like we would hit that mark, or like three to $4, somewhere in that range, like consistently, right?
yeah.
Now the national average is $3, but it's been like kind of hammered down. It peaked like post COVID. Interestingly, 2022 was like the peak recently for gas prices. But I know that the U.S. like achieved independence, right, in terms of just
Yeah.
like
Fossil
oil and
fuels.
production and et cetera. And maybe that's a part of this. But I know that a lot of what we burn is refined oil, right? That the refining doesn't all happen in the U.S. So we produce and export, and then we import refined gasoline. Isn't that right?
Yeah, yeah, it's true. Well, and when I was saying, peak EV, like I was trying to think of like when it was the most exciting, but not necessarily sales. Like I agree, sales have definitely continued to go up for EVs, which is, going to happen because just in general, even though car sales are down from last year in general, I'll say EVs do continue to slowly gain more market share over time, especially in the form of hybrids and plugins and things like that.
Well, this lines up with this conspiracy though, because if you're thinking 2015 was peak EV or peak excitement about like what EV could be, that's also when gasoline prices got squashed, right? So
Mm.
they actually went, the lows are like two, not actually one eight a dollar 84 was the national average in 2016, February 22nd,
Holy crap.
2016. Yeah. So I wonder if we're seeing the price of gasoline used as a weapon against the EV adoption by the people
Mm.
who need continued gasoline consumption. And I understand that oil is also like something that we used for our energy, and that energy powers EVs, et cetera. Like I understand it's all tied together, but I'm just curious about this relationship.
Yeah, I mean, it's a great point. I mean, it's no surprise that obviously when the EV tax incentive went away, the sales of EVs plummeted. I think what was it? The month after was September or October when it officially went away, and that was like the lowest recorded month of EV sales for years, which
Mm,
makes total sense but it's not a really relevant number because everybody who was thinking about getting an EV got it the month before. So it doesn't necessarily mean that October was a bad month. It just meant that September or August was an unbelievable month. And
yeah.
when you take the average, I'm sure it probably averages out to pretty close to where expectations were. But the Tesla Model S, by the way, was unveiled in 2009,
Oh wow. Yeah.
which is
Yeah.
kind of crazy. It's been 16 years. I had no idea it was
Well,
like
that's back when
that
Tesla
long.
was like fly by night, like almost,
Yeah,
in
it was like
danger of not making it, right?
Yeah, there wasn't that many people in the company in general, but yeah, I
Yeah.
don't know. I'm gonna use this to bridge into an AI conversation. that I know we wanted to talk about, which is I feel as if the excitement that EVs had in 2014 and 2015 is kind of how everybody feels about AI right now in that sort of trade in general and just the amount of excitement that's going into it. And is it a bubble?
Right. So what's funny is that I got a message from a client, like, I think it was right before NVIDIA earnings or somewhere around NVIDIA earnings last week. And NVIDIA had amazing earnings again this quarter. So they were reported this November, and the
Yep.
stock went up and then it went down with the rest of the market. And then it's, kind of recovered from there. But I get this message, and he's like, "Hey, is AI over? Is open AI over?" And I'm like, "If this was a bubble, this was the worst bubble in history. Like,
Yeah.
nothing happened. We didn't have any exuberance. Like, no, this is probably not the top because this is not what the top looks like." But, the fact that you have people who there's so much pushback against AI. There's a lot of anti-AI sentiment. AI is the bad guy. Don't share your information with AI. AI is going to take your job. AI is going to take over the world. I even hear this stuff. Do you ever come across this where people are like, "Are we living in a simulation?"
Yeah. The Matrix all the
Yeah,
time.
but no. Now I'm hearing this like, yeah, I know it was a movie like 16 years ago, 26 years ago, and now like I was listening to this podcast the other day. It's called Moonshots. And they were like, people are sick of us talking about, is this a simulation? I'm like, what? This is the first time I've heard you talking about this is a simulation.
I've
What are
literally
you
never
doing?
heard you mention this.
But yeah, I'm sick of it already too. I heard it once and I said, no, that's dumb.
Yeah. I have talked about that. Kaylee and I always talk about punching out of the matrix at some point in our lives and like, escaping from the world. I think it's
What
more
does that look
romantic.
like?
Yeah, I don't know. I think that means to her opening a bed and breakfast in France or something. Um, I don't think that's gonna happen anytime soon. But with that being said, yeah, the simulation thing I have heard before, and it's an interesting theory.
Yeah, I think it's dumb. Whatever. If this is a simulation, I'm happy to be in it because I remember what it looked like outside of the Matrix, and it was a really unpleasant environment. They were like all eating mush and
Yeah,
like they,
I'd rather
they
stay.
I'm happy here
Yeah.
in my Matrix. So, anyways, yeah, it's funny that we can have this like feeling that AI is over, and then at the same time, it's like people are worried that we're partying like it's 1999. So, I want to share a chart that I thought
Yep.
was pretty interesting, and this is coming from the head of research, global research at Fidelity. So, let me share this with you. All right, so this I think is what kind of scares people.
Mhm.
And I think you can look at a chart like this. What we're looking at is the journey of the stock market from 1996 up until the top in 2000, right? And that's what we reflect as the tech bubble, right?
Yep.
And we're comparing that to our journey right now. So we start in 2022 in this case, and that's probably my guess is that's like October 2022 when we start to recover from the lows, or maybe that's June and we worked our way up and then down and then back up again. Either way, at some point in 2022, which is when people feel like this current bull market, depending on who you talk to, this is when the bull market started because the bear market ended or
Right.
the bottom was hit. So if you look at a chart like this, you're seeing a couple of different things. You're seeing that, the direction and the kind of like the movement is very, very similar. You're also seeing that if this is like 1999, then we have not hit that exuberant stage, right? So if this is a bubble, the bubble is still forming. I think that's what you would take away from this chart.
Yeah. Well, and this is specifically in regards to this is just tracking the market in general. So I'll say I wonder if this is magnified even more when you drill into specific companies like Nvidia.
Yeah, I mean, I think Nvidia is a really good example of what doesn't look like a bubble right now
Right.
because you're not seeing that crazy growth track. But you're also in here, you're seeing the percent of companies above the 200-day moving average, which is basically to say, are they staying above their price over the last 200-day period? And when you have these extreme concentration, people are always worried about extreme concentration. Actually, I've got another chart for that one. But people are worried like, well, the market's too heavy. We've talked about this before on the podcast. And I think we've probably even looked at a chart like this before. But when we're talking about what the market is too heavy possibly means here, on the screen right now, we're looking at the weight of the top 10 holdings in each country's ETF, like the 25 largest countries of the world. So obviously the USA is in there, China's in there. Um, Funny enough, we might not talk about the Mexican stock market, but that's represented here.
Didn't even know they had one.
Japan, India, UK, France, Germany, all of the stock markets that you could possibly think of, I think. And the average weighting of the top 10 holdings in each of these countries, like their largest ETF, is 67%. So if you go to, let's say Taiwan, for example, and you look up like the 10 largest companies in Taiwan equal 76% of that
Right.
ETF, right? We're all the way down here on the left, 39% in the US, which is heavy, right? Like that's
It's heavy, but
heavier.
that means
Yeah.
in theory, we're one of the top 4 most diversified countries in
Yes.
terms of our top 10 holdings.
Totally. Yeah, that diversification is huge, and I think that's, one of the reasons that you're seeing Nvidia not look very bubbly right now. It's having pretty, basic performance. I think what is it up year to date right now? Because if you compare Nvidia to some of like the high flyers, it's not all that exciting.
Yeah.
The Nvidia up this year to date, it's 36%. Right. If you look at, I don't know, Robinhood, for example, Robinhood is up 209%.
Yeah.
Right.
Yeah. I mean, it's pretty crazy when you look at this. Obviously, we've gone over the heat charts before that show, obviously, the Magnificent Seven and all of the major companies in the US stock market and how they all play such a big role in how they're driving. But it is refreshing to see that when you zoom out, the concentration isn't nearly as much as what people expect it to be when they hear the news. Certainly not based off of historical numbers, and then on top of that, it's good to also see that we're actually quite well diversified benchmarked against everybody else because that
Yeah.
hasn't always been the case.
Yeah. Yeah. And I think the other thing is that exuberance and that excitement around the market isn't there. Right. And it's, you were saying, well, we're starting to adopt AI. It's getting a lot of use. Like everybody is using AI, but not everybody's using my AI. My mom isn't using AI. I'll tell you that. And she's probably not the
My
best
dad just started
example.
using ChatGPT.
Here's one thing that I think about when people ask me like, is this a bubble? This is the investor sentiment charted. Essentially, we're looking at a weekly kind of note of where we are with bullish versus bearish versus neutral sentiment in the investor clientele, right? So this isn't retail investors; these are professional investors. And the question is, where will the stock market be in the next 6 months? Will it be higher, lower, or I don't know? And
Right.
right now, you're seeing the majority of investors feeling like it's going to be lower, right? It's or lower or neutral. It's not bullish. Like there's nobody thinking like we're going to the moon, right? Like there are certainly like some areas of the market and some stocks in the market, like the IRENs of the world, where people were like, yes, this is it. This is the next big thing. We got to get in now. But that's not what you're seeing in our everyday conversations with clients, and that's not what you're seeing in the professional investor sentiment.
Yeah. I have a theory on kind of like the best way to define a bubble. And I'm curious to get your expectations or your thoughts on this
Mm.
because I was going back and forth with our thought partner, ChatGPT, on this. And I was like, how would you define a bubble? And it was basically like when expectations of a company don't meet results and there's a reckoning, so to speak. And I think that that's a really great way to break it down because if you go back to the dot com bubble and just think about that in general, you had all of these companies that were going to change the world. And people were just throwing money at them and throwing money at them and throwing money at them. But if you are basically, let's just say, spending $10 billion a year, but then you get a massive influx of, say, hundreds of billions of dollars from the stock market and funding and lenders and all of this kind of other stuff. You can't just take that extra $100 billion and just do something with it that's going to generate the same level of profit. Does that make sense?
Yeah, it does. I think in terms of figuring out like how to continue to get that growth engine growing, right? Is that what you mean? Like just like
Yeah,
how do
well,
we
because
continue to go
like
higher and higher?
OpenAI's annual run rate is $20 billion, but they
Mhm.
received $1 trillion in terms of flows and funding, like everything that they've kind of received over the last year, from what I understand. So the point is like if you're used to $20 billion and you were just handed $1 trillion, that doesn't necessarily mean that you're going to be, we'll just say 50 times more productive. That just means you have more money that you need to figure out what to do with. But if that's driving up the, I'll say, expectations of your business and also the valuations of your business, I think it's expectations that can cause something to blow up in general.
Well, yeah, I think that's fair. I think what causes the bubble, it feels like what you're working on there is like what causes the bubble, right? And we can
Yeah.
get into what a bubble actually looks like. Actually, I'm writing a Substack about this, so I've been doing a lot of thinking about this. So it's funny that you bring it up, but I do think that we have to keep in mind that OpenAI is not a publicly traded
No,
company,
it's not.
right?
Yeah. And
And
everybody
there,
looks at OpenAI and uses this as the benchmark,
right?
but it's not even in the stock market.
Yeah,
Now,
yeah,
granted, a lot of companies that are in the market do rely on its technology,
right.
but it's not traded.
But it's also not the only game in town, right? Like
Right.
you have Claude, you have Perplexity,
Yep.
you have someday Siri is going to be real AI, and it's going to be a real boy, a real girl, I guess in this
Alleged.
case, a real AI. But I think that the open AI risk is real, it's substantial because it is intertwined with everything, but it's really hard. It's private equity. It's like it's a privately held company, and we don't know what the what the market really thinks it's worth. It's not an open market valuation. So we can't really get into what that company is actually worth. But I think what pops a bubble can be a lot of different things. But what it looks like on the other side of that bubble pop, I think is something that people get kind of confused by it because there are a lot of people throwing around this term bubble right now, including us. Like we've said it multiple
Yeah,
times
of
in
course.
this
Yeah.
podcast. But what does that mean? Because it's not like a 2022 bear market or COVID or the 2008 financial crisis necessarily. Like that was a housing bubble, but the stock market
Right.
didn't act like a bubble. So if you look at the biggest bubbles in history, it's something like an 80% decline and a prolonged recovery 15, 25, 35 years. So
Yeah.
that's really important to keep in mind with the tech bubble was that. We the NASDAQ didn't get back to new all times till post financial
Oh,
crisis.
yeah, I was gonna say it came close in 2007, but it never outpaced where it was back in 2000. Like,
Yeah.
I don't think we passed where it was in 2000 until, what was it, 2015 or something like that, or 2014, if I
I think it
recall?
was yeah, it might have even been a little bit later than that. Yeah, it was a long the duration is the most painful part. It's not just that it goes down 80% because there's still some stocks that you could say that there's like a bubble maybe that's like it's comprehensive and all inclusive and it takes over the whole market. And then there's maybe bubbles within the stock, like the individual stock. And you can see like stocks like Zoom and Peloton that never recovered from, never. They have time ahead of them, but they haven't
Sure.
recovered from their pricing during the, post-COVID bubble. The Nikkei, the Japanese stock market, boy, I'm messing that
Yeah.
one up. The Japanese stock market just barely got back to new all-time highs that it hit in the late 80s. That's a
Yeah,
bubble.
man. It's nuts. Well, we always talk about this with consumer expectations and sentiment. And think about, like, we always talk about, grandparents and things like that that lived through the depression, and depression babies act very differently with money than
Yeah.
people who grew up in the 50s and 60s. And additionally, like, think about that. If, say, you sold a business or you had some sort of windfall and you put all of your money to work in 1998 or 1999 and you put it in the stock market, you invested, then next thing you know, the stock market blows up, it goes down, then you ride it back up, you're almost back to where you were in 1998, 1999. Once 2007 rolls around, another crisis comes down. You basically had 15 to 16 years of no progress in your portfolio. Now, granted, you're earning interest and dividends and things like that. But when you look at total return in general, just across the S&P 500, depending on when you put money in makes a huge difference in your impact in terms of your psyche and investing.
Yeah. Yeah. And you got that timeline right, by the way. It was 15 years for the Nasdaq to recover from that bubble. But you're right, and I
Yeah.
think that that's what people are not necessarily thinking about when they say bubble. They're thinking like a, I don't want to say garden variety of 50% decline, but a 50% decline is not a bubble. Not in the
Right.
stock market, anyways.
No. Yeah.
Those Beanie Babies that you were talking about not so long ago, like they're never going to recover.
No.
That's like a prolonged bubble right there.
Yeah. It's honestly just at that point, looking at the Beanie Babies or even the tulip bulbs,
The
Tulip
tulip.
Mania was
Yep.
was a very famous one as well.
Yep.
That bubble popped, but it never reinflated.
Yeah.
It's just gone. The value of it ceases to exist. It's no longer a valuable product. You
Right.
can list a Beanie Baby on eBay for $1 million, but no one's buying it. And it's the same thing with tulip bulbs. The moment they lost value, the value never came back. Now, with that being said, when you look at a lot of these products and companies that people think are overinflated right now, I think there's some validity to that. And maybe there is a lot of funding going in there right now. We don't know if it's going to pan out and increase the level of productivity and be this amazing situation that everybody's anticipating it's going to be for sure. But there is still use to the technology. So there is value there versus tulip bulbs or something like a Beanie Baby. Once the value goes away with that, it ceases to provide value to
Yeah.
society.
Well, what's interesting is NVIDIA, a lot of people have been talking about the AI build out as essentially like akin to the railroad build out.
Yeah.
And one difference that was being highlighted was that those tracks that or even the internet build out, like the
Yep.
fiber that was laid is still used. The tracks from the train build out still used right now. And people were saying, well, these chips, they're going to get outdated. They're going to be replaced. They're going to be obsolete. So you need to keep buying more and more and more. And that's actually what's going to
Great.
drive the value of NVIDIA. Here's the
Yeah.
thing. NVIDIA is using their software as service to keep these chips running at full capacity. So they don't need to replace these chips. NVIDIA is becoming a SaaS company, which
Well,
is
that's
not
Oracle's big thing
right.
right now.
Yeah. But it's
That's why
it's
they're
like
taking off because their SaaS platform is exploding.
right. And SaaS services for hardware essentially
Yep.
allows you to play both sides of that. I think it's really interesting. Okay. So let's talk about valuations versus earnings, because this is kind of what you were talking about. A company, is it able to continue to increase its earnings growth to justify the valuations? And what
Right.
we're seeing on the screen right now is the S&P 500 in blue and the earnings for the S&P 500 in orange, gold, whatever color that is. And what you're seeing is that they're moving more or less in lockstep, and the S&P 500 is not vastly out ahead of where the earnings are. So when we're seeing this, when the market increases in value, it's doing one of two things. It's either increasing market cap based on valuations or based on earnings, right? It's based
Right.
on like what we think it's worth versus what it's actually, what the earnings that are driving it. And these earnings are driving the returns that we're getting in the market. And yeah, sure, like there will be some sort of earnings decline. There always is. But is this earnings growth the result of an AI bubble? Or are we in the early stages of adoption of AI in these big S&P 500 companies?
I mean, it's a decent point. Is this just specifically this is every S&P 500 company right now, right?
This is the index. Yeah, this is the average. And
Okay.
this is one of the reasons why, to your point earlier, like we're one of the most diversified markets in the world, and that's a strength. Even though we're somewhat top heavy, we're nowhere near as top heavy as we were during the tech bubble when we did have valuations far outpace earnings.
Yeah, and I mean that's the thing. And pointing that out earlier with OpenAI, I think given what's going on there, it's great that they're private because, I would say those expectations might be skewed even more if they were publicly traded. But with that being said, I think a lot of people get freaked out when it comes to politics and things like that affecting the market. But I'll say that oftentimes politics in the markets are disjointed and they don't move in lock and step. You know, when you hear something crazy going on in the news, that doesn't necessarily mean the stock market's going to go down. However, what the market does tend to trade off of is earnings. And whenever you see an earnings miss or an earnings outpace, then the market does tend to react correspondingly to that. And when you have earnings in lockstep with the S&P 500, I would say that's probably a fairly bullish indicator that we're not overvalued at the moment and that things do look pretty solid in terms of a foundation in the market.
Yeah. And I think what you're actually helping us transition to here is consumer sentiment,
Yep.
pessimism, kind of like what's going on with the world. And I do have another chart to share on that because as it relates to AI threatening jobs, you can measure that through survey sentiment. And this survey data that we're looking at right now suggests that the younger generations, younger workers, are really concerned about the risk of losing their job and that
Yep.
risk is rising to highs that we haven't seen since the financial crisis or maybe just post financial crisis when it was really hard. Like if you to your point about like the timing that you retire, and where you are in the market having a big impact on your financial success, when you graduate college and go into the job market, that can also have a big impact on your financial success.
Of
And
course.
what we're looking at right now is this group of 18 to 34, which you still fall into. Um,
Not
there's
yet. I'm 35, but yeah.
Now you're 35. Yeah, sorry,
Yeah.
sorry.
Yeah,
I'm
I missed it
44.
by
I'm
1
not
year.
quite there. You're almost there.
Yeah. Yeah.
So you are just outside of that. You're in my range now,
Yeah.
which is also rising to high. This is actually, yeah, we are at the highs. If you're age 35 to 54, the perception of potential job loss risk is the highest it's been since the 2008 financial crisis. Same thing for the age 55 and up group, right? They're not as concerned about losing their job, probably because they see retirement on the horizon. And as you brought up before in recent conversations, some of these clients are excited to kind of punch out early from the job
Right.
or the workforce.
Yeah. And I mean, that's honestly reflective of what we're also seeing in the job market in general. November hiring slowed. And we've seen that this year just in general. And not only that, it's also led to a decline in, I'll say not a decline in wages, but a decline in wage growth. That's decelerated as well. And I do think that a lot of the issues with consumer sentiment has to do with job security. And if you feel as if that you don't have job security and if you fear that your income will cease to exist at some point in the future or you will be replaced, that's going to lead to negative consumer sentiment. And we've seen a lot of negative consumer sentiment over the last few months. We had, on record the longest government shutdown. Was it 43 days? Yeah, 43 days, which ended this month. But I'll say that while AI and earnings and those things right now look good, it doesn't necessarily make you feel good if you're worried about losing your job. And that certainly doesn't give you a whole lot of confidence to put a ton of money at work in the market in general right now. So, I can appreciate people being fearful of things when you look across, I'll say, the landscape in general, and you're seeing I'll say wage growth decline. And then on top of that, hiring also slow down as well.
Yeah, and that's why you're seeing also the approval rating for the president at all-time lows,
Yeah.
even below his previous term, which was also
Yeah.
not great. But yeah, I think people are happy. So, like to recap and to kind of like put a bow on this, is this a bubble? We don't have the irrational enthusiasm that you usually get or exuberance that you usually get with a bubble. There's a lot of fear and concern. There's that wall of worry that we're climbing right now. So I'm going to go on the record and say, I don't think that this bubble is popping tomorrow if it is a bubble. And if it is a bubble, I don't think it's going to be what we perceive it to be, right? Like the housing bubble was something that came out of kind of left field. Like there were some people who saw that coming, but most of us were pretty ignorant to it. I think that the tech bubble was maybe a little bit easier to predict, but there's still a lot of, I would say, justified earnings out there and justified reason to believe that we can continue at this pace without the world coming to an end.
Yeah. So just in summary, basically what we're saying is that it doesn't feel like a bubble because there's not that, I'll say, optimism that's out there in the market right now in general. Normally, when you have a bubble, you see a ton of overspending. You see people really excited, throwing a ton of money into the market. We're not necessarily seeing that. We're also not seeing a disconnect between earnings and the market in general right now. And we're not seeing too much concentration. We're actually fairly well diversified in the market in general right now as well. So I'll say in terms of markets, it seems like it's okay. And we often see that as well. When consumer sentiment is down, that doesn't necessarily mean that the stock market plummets either. Oftentimes, when consumer sentiment is down, the market goes up, which is kind of what we're seeing right now. It's been a pretty good year in terms of market performance. It's actually been a great year. And we'll see where we end up. But yeah, it's interesting when you look at all the numbers because, and we've talked about this before in podcasts, how you feel isn't necessarily reflective oftentimes of the results.
Well, I think that's the hardest thing for people to digest is that what's happening in the stock market, what's happening in corporate earnings is all in the face of a lot of concern, right?
Yeah.
There's political concern, there's climate concern, there's just a lot of unhappy people. We might not be at peak optimism, but it feels like in a lot of areas we're at peak pessimism.
Well, I think what this shows too, and I think like the takeaway that I'm talking to with a lot of clients about is it's disconcerting when companies make a lot of money by not necessarily benefiting the employees and the people that are out there. Right now, companies are generating higher profits by not hiring as many people, not giving raises to them, and honestly laying off as well by replacing them with technology. So, of course, people are going to be unhappy in that type of environment. And that directly contradicts with what's happening in the market because when you do that, obviously the profits of the company are going to go up. So the profits of the companies are going up, certainly at some could argue at the expenditures of the employees and the people in general.
Yeah, yeah. I think it doesn't even need that's just the truth. Like, you don't have to argue it. Like, it just
No.
is what it is. It's how they're designed, right?
Right.
And I think that
Yeah. I
that's
mean,
going to
the
continue.
cost of labor is the biggest line item for most of these companies.
Yeah, yeah. And I've been thinking a lot about we've talked about, like, different, jobs that used to exist that don't exist anymore, and, um our I guess our resiliency or our ability to adapt and find new purpose and new ways to make money in an ever-changing world. And I do think that we have to take a moment every once in a while to reflect the fact that things are changing at an exponential rate, like, all the time, and it's really hard to keep up with it all. It's really easy to feel left behind, and it's really easy to latch on the fear of change that, like, we so naturally gravitate to.
Yeah, people don't like change, and change inherently means a certain level of unknown, and we don't really know where we're going. Certainly, people can predict it, but we won't really know until we get there. And once we get there, there will be fear of something else too. So it's going to be really curious to see where this all goes and how regulation plays into the whole AI situation as well. What actually gets replaced, what's here to stay. People can make guesses, but no one really knows for sure. And it's going to be fascinating to just sit here and watch.
Yeah, yeah, for sure. All right, cool. I think that's a great place to leave it, Colin.
I agree. Yeah, this was great. Thanks for tuning in. Like, share, subscribe, and tune in for the next one.
Thanks, Colin.
Thanks.
Sponsored by Ko-Fi Advisors. Reach out today. Yay!